Sorry this is long, but I think it pertinent. You have to consider what the dynamics of a crash are. A stable, modestly traded asset can crash on the heels of bad news like their vaccine failed in some tests, or the FDA recalled a cash cow medicine the company makes. Or, like Enron and Arthur Andersen, financial scandal. A volatile, high-flying stock can crash when a run-up occurs and then major holders cash out. Everyone else panics and sells and the crash is thus completed. We saw this with Bitcoin in 2017. Nothing was known about crypto other than it was something making people millionaires overnight. There was a frenzy of buying from vast numbers of individuals based on nothing but speculation that the price would go up. Up around $19,000 some whales decided to take some profits and the price fell. The FOMO fueled little guys panicked and sold more and that sell more cycle continued until Bitcoin was $3,000. Today we have a similar situation it would seem. The price has gone up as before and exceeded its all-time high. One would think this would set it on a course of, what goes up must come down, followed by the inevitable crash. But it has not. That's because there is a different set of dynamics in play at this time. The buyers today are big institutions who are not buying short-term, they are looking for safe haven and will be holding. We see corporations buying in by the billions along with hedge funds and investment platforms like Grayscale. So who will dump enough Bitcoin to trigger the panic? Whales. In the old days, they dumped a wad, watched the fall, bought their holdings back at a lower price and pocketed the profits. That is not likely now. There are fewer whales for one thing, and if they dump, the current holders will not be panicking and driving a crash so the whale can buy back in later. In the current environment, with new institutions wanting to get in and the ones already in having buy orders at lower prices to cost average, those dumped coins will be bought up as the initial drop is blunted by that buying. If the whale wants his cash and to get out he can, but he will not be manipulating the market for his advantage anymore. I think this just happened. Here is a screenshot of the GDAX exchange today. You see the price going up to the $34,000 region and then those two big red candles and the price goes to $28,000. Normally that would cause a cascade effect resulting in a crash of some variable degree. But we see rapid recovery of the price and it climbs back to the $34,000 range. Where did those sell orders come from? Who had that many coins to dump? Not the miners. All their production is contracted out to institutional buyers, so there is no giant stash to unleash there. The original believers in Bitcoin HODL, so it is not them. The new institutions are buying to hold in an environment that is short in coin supply. The market is not saturated with FOMO-driven speculators that can be startled into a sell-off. Maybe the FBI had a confiscated stash or some deal like Mt. Gox recovered coins selling. Maybe a whale was testing the waters. Regardless, the market absorbed that dump and clambered onward. Today, versus 2017, Bitcoin and its financial potential is much better understood. The big boys pay big bucks to their CFOs to make deliberate and sound investments with their capital. And those big boys are doing just that. So the acceptance level, use level on a global scale has weathered through a shitstorm of name-calling, JP Morgan, it's a fraud, and regulation fears, Libra, and basically, nothing has killed it. It has proven its viability and big money is listening and putting its money where its mouth is. And then, there is gold. Gold is a $12 trillion global asset. BTC is around $500 billion now at $30,000 per coin. If Bitcoin were to encroach on the gold niche, and it is, then it would have to increase in value about 24 times to equal the gold value. That would put Bitcoin at $720,000 per coin. Now that may not happen. But the big boys are warming to the Bitcoin as digital gold thoughts and gaining acceptance there. So that pathway is open. How far it goes on that pathway is up to a lot of variables, but today JP Morgan says it can see a $146,000 BTC. When you put it in the gold context, that does not seem so far-fetched anymore. And BTC has so many more advantages to gold as a store of value. No storage, no vaults, no guards, not problems and risks transporting, no errors in how much a bank is really holding versus what it is supposed to be holding, no third-party validators needed, instantaneous worldwide transactions. So the big boys like all that. And it puts acquisition pressure on the market.